Hey gang, Larry Bailey here, bringing you another market news update. Today is July 29th, 2024. We've got 5 stories to go through today. Here they are. The first one is inflation readings keep Fed on track for September cut. We're going to get into that. The next one is all about existing homes. They're on the decline and inventory actually ticked higher. We'll go into those details. The third story here is new home sales hit a 7-month low. And what does that really mean? As it pertains to the rest of the macroeconomy. The fourth story is all about second quarter GDP. It's much stronger than forecasted, but this is only the first read. We'll go through those explanations. Then the jobless claims improve, but remain elevated. We'll get into those stories. Hey, gang, this information is sourced from mbshighway.com. Just so you know, if you ever want to get this directly, head over there and get more. It's also brought to you from Mortgage Workflow Partners, where we understand how to make sure your workflow is running as efficiently as possible, especially when you're using the Encompass platform. You can become a master of your Encompass platform, even as a user or as an administrator. Find out more at masterencompass.com. And finally, be sure to follow us on socials. You can get us on YouTube using the Mastering Encompass handle. You can also follow us on anywhere that you get your podcasts. So here's the week of July 22nd, 2024 in review. And so the Fed's preferred measure of inflation, which is the annual core PCE, that remained at a 3-year low while home sales were subdued in June. Plus the economic growth for second quarter surprised to the upside. And so let's get into these stories as we talked about. The first one we've got is inflation readings keep Fed on track for September rate cut. We've been talking about rate cuts now, I don't know, for 2 years, ever since they started up. And earlier this year, there were 3 that were planned, and there actually still is time, even though it's already July. It's going to be August this week. But the Fed's going to be meeting throughout the rest of this year, and we'll see what they do. The PCE actually came out with some interesting information that might get them to bump that rate down. So June's personal consumption expenditure, that's the PCE, that showed that the headline inflation rose 0.1% from May, while the year-over-year reading declined 2.6 to 2.5%. The core PCE, that strips out the volatile food and energy prices, that actually rose 0.2% monthly. And so the year-over-year reading held steady at 2.6%, which is the lowest level in 3 years. Bottom line in the story is the Fed has been working hard to tame inflation, hiking its benchmark Fed funds rate, which, as a reminder, this is the overnight rate that banks borrow from the Federal Reserve. It's not what you and I pay. They hiked that 11 times between March 22 and July 23. These hikes, of course, are designed to slow the economy down intentionally because they make things more expensive and they lower, hopefully, the demand for goods, which reduces inflationary pressures. That's the whole idea. Inflation had been making good progress lower late last year, if you remember those stories, but then beginning of this year, it stalled. And that caused the Fed to hold rates steady. We didn't get those cuts as quickly as we thought. And that started really last September. However, keep in mind, there have been improved readings throughout the second quarter that have led growing expectations that the Fed will cut rates at their meeting on September 18th. These latest PCE numbers, of course, leave the Fed on track to make this move. We shall see. The next story that we get into is existing home sales decline, even though inventory is ticking higher. And there's this whole balance, right? Supply and demand. There's a lot of folks that are like, build, build, build. Other folks are saying, dude, let the economic scale kind of balance a little bit. And so existing home sales, they fell for the 4th straight month per the National Association of Realtors. That's the NAR. As June's transactions were down 5.4% from May. And they were also down 5.4% from a year ago. And this report measures the closings, just so you know, on existing homes in June. And of course, people didn't just buy a house in June and close. They probably went under contract in April or May when rates were well above 7%. So what to watch for here is while the number of closings declined in June, some of the internals of the report point to demand remaining even in the face of elevated interest rates. Homes remained on the market for a shorter period than in the recent 3 months, with averaging only 22 days in June, down from 24 days in May and 26 days in April and 33 days in March. So there's definitely a trend line where housing is closing quickly. Plus, almost 1 in 3 homes, about 29%, sold above the list price. Now, I can tell you, a friend of mine actually, she's buying her house, first-time home buyer, doesn't know a thing about what she's doing. Found a house here in New Jersey. It was listed at $250. She bids $280 and still gets outbid. She loves the house. Well, she loved it. Somebody else is going to have it now. But this reflects inventory problems, right? And so on that mark, there were still 1.32 million homes available for sale at the end of June, which is up 3.1% from May and 23.4% from last year. So 23% more inventory. Keep that in mind. While this remains below what are, quote, healthy levels, rising inventory is certainly a step in the right direction to help improve persistent tight housing supply we've seen across much of the country. And that's true. There's still a housing supply issue. New home sales hit 7-month low. And so leads us into this story. New home sales, and these are the measure of signed contracts on new homes, that fell 0.6% from May to June, marking the second straight monthly decline and the lowest level we've seen since November last year. Signed contracts were also 7.4% lower than they were in June of last year, with the Northeast seeing nearly a 64% annual decline. And I'm telling you right now, that's probably related to inventory shortage more than anything else. That's my own personal opinion. We'll see. So the bottom line in this story is, despite pullback in sales, buyers are still turning to new construction market, which is given the ongoing shortage of existing homes for sale, is probably at least a path, right? However, more quote-unquote available supply, as example, completed homes ready for buyers to move into, is needed to meet the buyer demand. Of the 476,000 new homes available for sale at the end of June, only 102,000 were actually completed. So builders are selling dirt with the expectation of building the house. Only 102,000 were actually completed. The rest were under construction or not even started yet. Yeah. So, this is where a lot of advocates are saying, like, build, right? Let's build our way out of this problem. I don't know. We'll see. So the second quarter GDP was reported stronger than forecasted, and the advanced estimate of the gross domestic product, also known as GDP, for the second quarter showed that the U.S. economy grew by 2.8%, according to the Bureau of Economic Analysis. This was well above the 2% estimate and double the 1.4% growth seen in the first quarter of this year. So bottom line here is, gang, remember, the economic activity was better than expected last quarter due to, in part, strong consumer spending as well as inventory buildup. This is where companies are buying up supplies for the rest of the year, especially for Christmas season, which I know sounds weird for July. It's basically August. And so if you do the math, it's actually right on time. And so this data could be revised when the second and final readings, which are released August 29th and September 26th, respectively. So we'll keep our eye on that. I'm sure the Fed will too, right? Jobless claims. They're improving, but they're still elevated. So the number of people filing for unemployment fell in the latest week, though jobless claims remained elevated when compared to the beginning of this year. First-time filers measured by initial claims totaled 235,000, with 1.851 million people still continuing to receive benefits after filing their initial claim. Bottom line here with this story is both initial and continuing claims have been trending higher throughout June and July, with continuing claims topping 1.8 million for the past 7 weeks. This shows the pace of layoffs over the last 2 months has picked up. At the same time, employers have slowed down hiring. Gang, if you're watching this on video, you're about ready to see the family hack of the week. But if you're listening to this on podcast, head over to our socials or in Mortgage.community and check out the video replay, because that's where you'll see this family hack of the week, which is celebrating National Ice Cream Day, Sandwich Day. It's August 2nd, in case you didn't know. And there's a recipe on here. It's right around the 9-minute mark of the video. You can check it out. Here's what we're looking for this week. So it's a jam-packed week, gang. In housing news, look for appreciation data for May from Case-Shiller and the Federal Housing Finance Agency on Tuesday. June's pending home sales will be reported on Wednesday. Labor sector data also make the headlines with updates on job openings. That's a JOLTS report that comes out Tuesday. Private payrolls Wednesday. Unemployment claims Thursday. Non-farm payrolls and unemployment rate Friday. It's a jam-packed week. And of course, this is all leading up to the Fed's two-day meeting, which begins Tuesday with their monetary policy statement and press conference coming Wednesday afternoon. There is definitely a lot going on for this week. So keep your eye on the markets. You can kind of, if you've got a subscription to MBS Highway, you can keep track of this stuff live. Right now, the 30-year bond is better by 3 basis points, and the U.S. Treasury is the yield is lower by 2 basis points, right around 4.18%, which is really great, especially compared to a year ago or even a few months ago. So thanks for watching. Again, my name is Larry Bailey. Thanks for always paying attention to what's going on in the market and coming here for the news. We'll catch you on the next one.